Hello there, ladies and gentlemen, and welcome to the latest crypto network tutorial. Today we are going to be speaking about futures trading, in particular trading crypto on the futures market and what futures is. So this tutorial is beginners friendly, and we will make a second and third part talking about further advanced techniques when it comes to trading futures. So stay tuned for more parts and follow our Instagram here at Crypto Network for the latest updates and team news. Right, what is futures trading? Now, I'm going to keep this very simple for everyone, and this is simply beginner friendly, so it should be easy to follow along. Futures are effectively contracts which enable you to agree a price for an asset in the present to be exchanged in the future. Now, I'm going to break this down and give you a little simple example. If someone buys a futures contract, for example, let's use crude oil. If someone decides to buy 100 or 1,000 barrels of crude oil from the agreed price until, let's say, an expiration period in August, now, this means regardless of the market price changing, so if crude oil goes up or down, it doesn't matter. The seller and buyer have agreed the exchange of 1,000 barrels at a predetermined price to take place in the future. Now, unless either trades their contract to another buyer or seller before that date, the original seller will have to deliver 100 or 1,000 barrels of crude oil to the original buyer, whatever the contract states. Now, for a futures contract to take place, there must be two parties, a buyer and a seller. Now, futures trading is quite simple. It effectively lets you speculate on whether the price of a futures contract will rise or fall. Now, before we move on to something else, let's just talk about one thing, and that's leveraging. It's very important you understand what leveraging is. Now, we trade futures with leveraging. It effectively lets you receive an increased market exposure in exchange for a small deposit. The deposit is known as your margin, and your broker effectively loans you the rest of the full trade value. Now, this is something you need to understand. The higher the leverage, the easier it is to blow your account. Now, what we're going to talk about is two types of trading when it comes to futures: short and long. Now, you can either go long or short on a trade. Now, remember we said there has to be two parties, a buyer and a seller? Now, one will be entering the market long, which means they will be buying and expecting the price to raise over a period of time, and one will be entering short, and they are buying at a predetermined price, hoping the price will fall over a period of time. Now, we'll guess in part 2 and later videos, we will go into how to trade the market going short and what sort of you need to look out for as an analyst and trader going short, but we're just going to keep this one simple and show you how to place a trade going long. Now, quickly, you may be asking how a future's priced. It's pretty simple. Futures are priced according to the spot value of their underlying market, plus any spread a broker may decide to apply. Now, most of you won't be experiencing any spread using Binance, but spread is effectively the difference between the market price or the spot price and the current price you are seeing, and that's typically the broker commission. Now, let me take a look at Binance, and if you guys want to get set up with Binance, we've put a link down in the bio where you can get reduced commission and reduced spread, so we really advise you to take a look. But first thing you're going to want to do is set up an account on Binance. Now, once you've got an account set up, you're going to want to click wallet and then futures, and we're going to end up here. So this is just an account we've created just to give you an example of how to do things. So the first thing you're going to want to do is transfer money into your Usdm account from your spot account. Now, usually you can do this in Tether, BNB, or Binance USD. So we're going to do this in USD Tether, and we're just going to transfer over 30. Just to give you guys an example of how it works. So now, as you can see, transfer successful. So now we're going to click on derivatives and then USDM futures. Now, if this is your first time trading on Binance, you will be asked to complete a questionnaire just to make sure you understand how futures works and how leveraging works. I mean, it's all part of risk management. There are guides online to help you pass this questionnaire, so it's pretty simple to do. But once you get into this screen, this is where we're going to be trading. So let's just use an example pair. And what you're going to want to do to search your pair is go to BTC USDT perpetual. And then let's say we're going to search Dogecoin. Now, we want to trade on Dogecoin, so let's open up Dogecoin. Now, It's pretty simple. We're going to show you how to place a buy, e.g. going long on the position. Now, go to the right of your screen here, and as you can see, we are on 20 times leverage. I advise all new traders not to touch this because, in simple terms, you're going to be extending your exposure to your position, and as easy as it is to gain profit, your margin will blow much faster, I promise you. So just keep your leverage at the same. We're at 20 at the moment. Now, as you can see, look, you have two, limit and market. Now, if you were to enter at a limit, you are a market maker, and we will touch more on this in part 2. But as we are keeping this beginner friendly, let's just go with the market option for now. Let's do limit. Sorry. Now, we're going to want to buy this position. So what we're looking at is the current price. As you can see, 0.5093913,920. It keeps adjusting. So we're going to want to enter a price here where our position is going to enter straight away. And usually what you're going to want to do is enter usually within 1 or 2 pips of the current price. So let's enter around 750. Now, size of dodge. As you can see here, this is the maximum available to you. We can purchase 1,192 dodge, leveraging our position at 20x. So let's purchase a position of 500. Now, our limit order is filled. As you can see, we are into the position now. And you can see your P&L down here, your balance. And what we're going to want to do is scroll up. Right. TP and SL. This is important for any new trader to understand. Now you've got a live position. What you're going to want to do is go down here and see you can edit in a TP or SL. And this is very important for new traders to understand. It's part of risk management. Now, not everyone can watch their trades 24/7 every second of the day. So a take profit and stop loss is essential in ensuring your trade does not overexpose itself, or at the same time, you may decide you want to take your profits, but you may not be in the position to realize you are in profit because you might be asleep overnight or you might be at work. So a take profit is a point or a market price at where your position will close and secure the profit. So this is how we're going to play it. You're going to want to click this little pencil here, and it will bring up take profit and stop loss. So now, as you can see, we are buying the position. So we entered the market at 0.507200. And what we're going to want to do is search for a take profit around, let's say, 0.1500. Now, if this price hits, our position will close immediately and secure a profit of 3.9 USDT. So let's just aim for a little higher, and let's say we're going to target a price of 0.3500, $13.9 US. Now for the stop loss, this is important. Most traders will always believe their position will come back into green if you're in a negative. A stop loss is all part of risk management, and it ensures your trade does not go into a greater loss than you want it to. So for a stop loss, we're going to want to set it at a price just below the entry. So as you can see, let's go 0.4900. Let's go 0.48. Now, if the market price drops to 0.4800, we're going to lose approximately 13.6 USDT. But what you want to always ensure is you trade with a stop loss and a take profit. This is a way of limiting your exposure, limiting your losses, and it's also a way to secure profits. So confirm. Right. And now, as you can see, our take profit and stop loss is set. And as you can see, our current return on equity we're down about 0.82. But our position is live now. We have 500 dodge on a long position at a 20x leverage, which is approximately 8.71% of our margin. And it's pretty simple now. It's just a case of we either want it to hit our take profit, or if it's an adverse trade and the market's bearish and it drops, it's going to hit our stop loss and ensure we don't lose too much money. Now, the final thing I want to cover quickly is how to close our positions. Now, let's say you're watching the market for 20 minutes, a couple hours, and we're in a period of consolidation, and your top take profit or stop loss is nowhere nearer to be seen. You can close your position early by simply clicking on this button here that says close all positions. And as you can see, close all positions, confirm, and that's our futures contract closed and ended. Right, that's part one covered today. Would appreciate if you could drop a like and a comment in the description below, and we will release a part two very, very soon covering how to short futures contracts on the market. And we will also cover what to look out for, the benefits of trading short, going short on the market, and there'll be a part two and part three coming very soon. Thank you everyone for tuning in.